Volatility spiked today, and one of the biggest culprits why is because of regional banks. They broke down hard, bringing the small cap down, index down with it, and pushing investors into places like gold, continuing to push them into gold, as well as other safety trades like treasuries and safety currencies. So I'm going to break down in today's preview video the 5 charts. I'm gonna pick out 5 charts from our market outlook full version of the video and kind of preview what we go through during that. Today it was like a 40-minute long video. Give you a preview of what we talk about there. All right, sorry about that. So this is the last day for the market outlook video. So I'll be gone tomorrow, and I'll be gone over the weekend into next week. So the next market outlook preview and market outlook for our subscribers will be next Friday. So just be aware of that. We'll break down today what happened, of course, but we won't. When I come back next Friday, we'll break down everything that happened over the course of this past week. So let's go ahead and get started. Today is Thursday, October 16th, 2025. This is the Market Outlook from MarketScholars.com. My name is David Settle. Okay, before we get going too far, I invite you to click this link up here in the top right corner of your screen. That takes you to our Market Outlook blog post. It's a free blog post. You can see this is what it looks like. A recap of everything that happened today. Very detailed, breaks everything down, lets you know what happened, why it matters, what to watch next, what's going on there from all from an educational standpoint. So you get that for free. And now when you click on that link, it will look like this. So if you're already a member, you can log in there. If you're not a member, if you're not logged in, just click this join free. It takes you to our basic subscription page. Click this link. It will also take you right here. You can join our site for free. And like I said, get access to all of our blog posts. In fact, if you go to Market Outlook and click under Market Outlook video archives, you can see you get access to all of them, and you'll get today's video, the Market Outlook previews here. When you're a subscriber to our foundation tier, the full version of the video will be right here instead of just a preview, and you can see you can upgrade right there to the foundation tier to get access to the full version of the video for very low cost. All right, now let's take a look at what's driving the price action today. So the big news of the day today. So the S&P finished with a bull tag. So we got a bull tag on the day today. The intermediate lines crossed already below market sentiment, but it's now moving towards, this is the lowest the intermediate line's been on this entire intermediate rally and that we've been on. Still in bullish territory, so we're not done with the rally. Bull tags can lead bearish declines, or they can bounce, right? As we've seen bounces up to the upside. But it is the lowest that the intermediate line's been. Over here, it got about this low, but we hadn't been that bullish either. And you can also see the near-term line still below the intermediate line. So we're still not getting a bullish cross when both lines are between the reversal zones. To get a bullish cross there is something to keep an eye on. And the Bollinger Bands, the bandwidth is still really, really low. The stock is pretty. Friday's candle is pretty much the extent of the bandwidth. So as soon as we break out of either Friday's high or Friday's low, one way or the other, we're going to be also breaking out of the Bollinger bandwidth and pushing and starting to trend in either direction, whether it's an intermediate pullback to the downside or a breakout to the upside. Today's move on the VIX was notable. You notice we closed above 100% relative to the VIX 3M. The VVIX closed at 134. We closed at almost 25, well, a little over 25 on the VIX. You would think just from these two charts that we were trading like we were down easily at 5%, or even probably past 5%. And we're not even down 2% from the all-time closing high. So very interesting move there. Of course, the big news on the day today was a break in the regional banks, right? The regional banks dropping down. You can see breaking the 200-day moving average. This is important because regional banks are, pretty much correlated to the S&P 500. And when you see a big break, a big change in the correlation, in this case, because banks are dropping before the S&P, usually that divergence leads to a significant move to the downside. Something also to keep tabs on is this parabolic move in gold. It's about as parabolic as move as we see I did a deep dive into this in our options inventory trading class today. There's only one other move that we've had that's been this explosive over this amount of time, and that's like the 79.80 move. Like we're finishing options expiration with one of the biggest runs, especially a 2 expiration cycle run in gold that we've ever seen. In fact, I show it to you right here. Let's go max available, and we'll monthly chart, but based off the options expiration cycles. We'll go to gold here, and then we'll change it to, so you can see 17 for one cycle is pretty bullish, right? There's been one and 99 that was pretty bullish there, and then of course 79, right? But if I were to change this to now do the 2 expiration cycles back to back, 29% is the only one other time. It was in the 79 and then early 80. That's the only other time that gold has been this parabolic in such a short amount of time. The other factor too that's still pushing stocks is the breadth. The breadth's still looking pretty bad, and suggesting that potentially more weakness is coming. If you take a look at the breadth indicators that we like to look at, in particular, like the number of stocks above the 50-day moving average, breaking back down almost below 200, was actually below 200 earlier in the day. And then this is the advancers relative to the total issues, down at 26%. So very, very low. Breadth is really bad. And again, considering everything that's all these signals piling up, and the market outlook, from the full version of the market outlook, I break down the implications of all these charts and what we can expect going into the new expiration cycle and into the rest of October, and to the very end of this seasonally volatile time of year, what we should expect to see going forward based off of these patterns. All right, well, that does it for our market outlook preview. Again, click this link to join our website at our foundation tier for just $29 a month. You get access to the full version of the market outlook every single day. And not only that, but you also get access to the trade that we do at the end of the market outlook video. The market outlook live, which is a live stream we do at 3:30 Eastern time before the market closes. We put on the trade in real time, and then we manage it in real time during that live stream. So we take a look at all the trades that we still have on from prior videos, and we talk about when we should get out of them, which is probably more important than when, just giving you an idea of something to get into, is when do I get out of it, right? And then we also keep track of the results of all of these trades throughout the year with our trade tracker, and you get access to that as well. All again for just $29 a month, or roughly about $1.40 per video. Thank you very much for watching. Follow me on Twitter at DavidSettle42 for more content between the videos. As I mentioned before, subscribe to our site for free to get the market, at least for free, to get the Market Outlook blog post every day. Share it with anybody else. Subscribe to our YouTube channel with this icon here, or over here, or the subscribe button down below. Click the thumbs up icon to like our video. Comment, share the video. Follow me on other social sites as well, LinkedIn, Facebook. Have a great rest of your weekend, everybody. Remember, this is my last market outlook until next Friday. So the next market outlook video will be next Friday. We'll see everybody then.